the IT space now. Infosys is set to report its Q2 earnings, and a steady quarter is likely in store this time around, with growth in the BFSI segment that is likely to drive revenues this time around. My colleague Mansi is here to take us through the details of what the street is penciling in for Infosys.
IT major Infosys is slated to post its quarterly earnings, and we'll start with the revenue drivers. We expect an uptick of around 6% in terms of revenue. The growth will be basically supported by the BFSI vertical. If we talk about the margins are expected to remain stable at 21% is what our expectations say. In particular, talking about the headwinds, the concerns in the overall setup, the higher S&M investment, legal professional costs are some of the concerns which will trigger the results for that matter. Talking about the tailwinds, the positives, rupee depreciation and operational efficiencies which we have seen in the company and the development of the company and in the operations of the company will act as the tailwinds in particular. Guidance, we are expecting the revenue growth to be in the range of 1 to 3% on a year-on-year basis, and also if we talk about the margins, 20 to 22% is what is expected. Note the guidance excludes the Versent Group acquisition impact, so that is an important note. In the guidance which we are talking about, it excludes the Versent Group acquisition impact. Lastly, talking about the key monitorables which one needs to watch out for, the discretionary spending outlook, H1B visa impact, Gen AI deal win and revenue productivity impact. All the IT companies are now talking about artificial intelligence and developing their workforce in the AI category. The vertical performance, deal TCVs and pipeline and pricing trends. These are all the key monitorables which we need to watch out for when the Infosys numbers will come in. All in all, we expect stable margins, revenue to drive growth, and at the same time, the profit will also see an uptick of around 4%.
All eyes will be on Infosys, but other than that, even Wipro is slated to report its earnings. What is the street penciling in? Let me once again take it across to Mansi to know all of that. Mansi, take it away.
IT major Wipro is slated to post its quarterly numbers, and if we talk about the parameters which we are considering, we expect flattish constant currency revenue on a quarter-on-quarter basis within guidance range of 1% at least. The BFSI vertical will drive growth. We do see that in all the IT segment company results, the BFSI vertical which is performing really better, and the same will be the case in case of Wipro as well. Weakness will be seen in manufacturing, retail, CPG and logistics segments. Margins are likely to stay in a tight range due to upfront requirements in large deal ramp-ups and the few concerns which we did see. Margins in a way will see a softening, a slight softening or see a bit of an uptick. We are expecting it to be in the range of 16 to 17% due to muted top line and large deal ramp-up cost as we speak. The second half is expected to outperform the first half, supported by strong deal closures in the first quarter. So that's something we need to watch out for. Key watch points which we are considering, the monitorables are the Q3 guidance tone and large deal execution, what the management is talking about, the forward-looking approaches, execution on ramp-up, H1B visa fee impact, consulting demand outlook, deal to revenue conversion visibility, margin and vertical commentary. A very important and critical observation is that all of the IT companies are now talking about artificial intelligence, and clients prioritize AI data and modernization programs, seeing a clear trend of many AI projects moving to scale and production. So clearly some announcement is expected here as well in terms of AI and going ahead in the artificial intelligence and that space in particular. So all in all, we expect the revenue to see an uptick. The EBIT will also see an upsurge. Margins will stay intact in 16 to 17% levels. However, we might see a downtrend in the profit front.
All right, so that's about Wipro. That's what the street is penciling in. There might be some downtick as far as the profits are concerned. But Mansi, a busy day coming for you as well. LTI Mindtree, that one is also going to, post its earnings today, and it's likely going to post a 4% sequential revenue growth in the second quarter. And growth is likely going to be led by retail, travel and manufacturing spaces. In fact, the street is eyeing the CEO's strategic roadmap, deal ramp-ups and margin stability. Those are the key commentary that the street is eyeing out for. But what are the other details that the street is penciling in?
The quarterly earnings of LTI Mindtree, our expectation is to see a constant currency revenue growth of around 2.1% on a quarter-on-quarter basis, driven by a ramp-up of large deals. We also expect retail, travel, manufacturing and healthcare verticals to be the growth leaders, the growth drivers. Margin expansion is expected on operational efficiency, growth leverage and rupee tailwind. So these are a few positives which one needs to consider, which will help the margin. However, our expectation are for the margins to be in the range of 14 to 15%. So that's what we expect. Talking about the constant currency growth, it will be aided by ramp up of agri deal, top account pass through behind and cross currency gains. And a few watch points which we need to consider are the progress on CEO Venu Lambu's strategic initiative. Last year, the management took Venu Lambu as the CEO of the company, and now what are the forward-looking strategies he has for the company is what we need to watch out for. H1B visa fee impact, demand outlook in BFSI segment, particularly manufacturing and high-tech segment, the deal ramp-up visibility and margin sustainability ahead. So these are the key watch points, monitorables which we will consider. However, talking about the numbers, we expect good set in terms of revenue, EBIT margin as well as profit figures.
All right, lots of earnings to be washed out in today's trading session. That's about the IT majors, but within the FMCG pack, it's Nestle India all set to report its earnings. Let me take it across to Snehi to help us understand what is the street really expecting from Nestle India.
Well, yes. So if you take a look at Nestle India's Q2 earnings expectations, we're expecting a decent set of numbers coming in. Remember, this is going to be the first quarterly earnings under their new CMD Manish Tiwari, who took over on 1st August from Mr. Suresh Narayanan. So on a standalone year-on-year basis, we expect revenue to go up 5.1% at 5,366 crores. EBITDA is expected to rise 2.7%. Net profit, we're expecting this number to come at 762 crores compared to 986 crores this time last year. It's a downtick of about 23%. Now remember that in the base quarter, which is Q2 FY25, there was a one-off gain from the sale of the nutraceutical business up to 290 crores. So if we don't account for that, then PAT is expected to go up by 9.5% given a base of 696 crores. EBITDA margin seen under very nominal pressure at 22.3% compared to 22.9%. Key expectations are that domestic sales will be up 5%, exports up 10%. There could be some GST impact on channel destocking, so watch out for that. Subdued performance in milk and nutrition, but on the flip side, confectionery, prepared dishes to do better, and some pressure on the back of early monsoons and long monsoons on beverages as well. So when the numbers do come out, GST impact, volume outlook and their investment in brownfield and greenfield, updates on that front, expansion, distribution update and demand on the rural and urban front. All of these factors are going to be important to watch out for, but well, yes, a decent set of numbers is what we're expecting from Nestle this time.
A decent set is what we are expecting from Nestle, but that's not because Zomato's parent, that is also going to report its earnings today, and a strong set on a sequential basis is what we are expecting. Profits, they could jump over fourfolds, aided by robust revenue contribution from Blinkit. What are the other details that we need to watch out for?
Well, yes, so for Eternal or Zomato as we know it, we're expecting to see a strong Q2 on a sequential basis. It's a services company, which means we'll be looking at these numbers on a sequential basis. On a consolidated sequential basis, revenue is seen at 8,665 crores, which is an uptick of 21% quarter on quarter. EBITDA is expected to jump about 2x at 235 crores. Net profit, we are expecting to see a very strong surge over here at 108 crores compared to just 25 crores in the last quarter. So that's more than a 4 times jump coming in. Margins are also seen at 2.7% compared to 1.6%. So strong numbers is something that we're expecting to see. Segment wise then, quick commerce, the Blinkit arm, the revenue is expected to go up 58%. Food delivery up 5.5%. Hyperpure, we're expecting to see some pressure, so a 10% downtick in their revenues. Going on, business also looking healthy at 15.5%. The key expectation is that the Blinkit gross order value should be up 26% sequentially. Blinkit EBITDA margin of negative 0.6%, which means we're expecting the EBITDA losses for Blinkit to reduce further. Food delivery adjusted EBITDA as a part of percent of their GOV should be around 4.3%. So when the numbers do come out later today, watch out for food delivery as well as Blinkit GOV growth, net dark store addition and Blinkit's part towards profitability, and of course outlook on the festive season. But all in all, good set of numbers we're expecting from Eternal.
So much, Snehi, for getting us all those details. But now let's touch upon